Okay, it has been a better day on Wall Street after a few tough ones earlier this week.
That's good news. Let's check back in with correspondent Christina Thompson, live at the New York Stock Exchange in downtown Manhattan. Christina, how did it go today?
Well, a lot of ups and downs, of course, which is it's to be expected with all of these tariff news coming out. We're following this news cycle also with that CPI report being released today. The White House issuing a statement on that saying this inflation report, much like last week's job report, is far better than the media predicted and the so-called experts expected. President Trump is driving down costs through massive deregulation and energy dominance. Now, the CPI showed that housing inflation cooled off, airfares and pump prices dropped. This inflation data doesn't yet reflect the tariffs impact. Now, egg prices are the ones that helped to push up inflation in February, but those pressures are already moderating according to the latest data, which does show egg prices coming back down. So, of course, now we're looking at the tariffs that are impacting the market. Trump's steel and aluminum tariffs took effect on Wednesday, plus those Canadian and European counter tariffs. So despite that mildly encouraging CPI report this morning, we're still seeing a lot of volatility in the markets. Bob, Katrina.
Christina Thompson from the floor of the Wall Street. There, we appreciate it. Thank you. Okay, we're going to turn now to cryptocurrencies and the reaction to the Trump economic agenda. Cryptocurrency heavyweight Bitcoin has been rattled in recent days due to concerns over tariffs, slowing economic growth, inflation. Approximately 15% of its value was lost last month.
All right, joining us now, economist at the American Institute for Economic Research, Tom Savage, plus crypto educator and host of the Daily Zest with Randi Hipper. That would be Randi Hipper. Tom, I'm going to start with you here. I'm assuming this is not much of a surprise considering cryptocurrency is known to be a bit of a roller coaster. And if you're diving into it, that's what you should expect. Is that true?
Yeah, that's absolutely true. And of course, the golden rule with investing is never risk anything you can't afford to lose. If we want to see less volatility, though, the government needs to take a step back on taxes, step back on regulation, stop getting involved in so many aspects of the market that are going to create uncertainty. The key there is reducing uncertainty, and that'll help the crypto space, that'll help America become the crypto capital of the world.
Randi, sometimes I think Bitcoin mimics the S&P. Your thoughts on that?
I think Bitcoin has done way better than any other asset that we've known for the last 15 years. It's statistically the best performing asset out of the last 15 years. And even if you look at Bitcoin's price since election day, we're still up around 19-20%. And we hit an all-time high of around 109,000 and we're pulling back. And this is a normal pullback. And I always love to say, when in doubt, zoom out on the charts.
Well, that's the way to do it.
That's a good point.
Yeah, no, that is a good point. All right. Tom, we're almost out of time here, but just very quickly, do you think this will bounce back pretty fast?
Oh, the jury's still out on that. And again, that comes down to, is government going to reduce its policy uncertainty? You reduce that uncertainty, we could see a bounce back. If they don't, I wouldn't hold my breath on it.
All right. We've got to leave it there. Almost out of time on this Wednesday afternoon. Tom and Randi, great to have you as always. Thank you.
Thank you.
Thank you.
All right. Well, that is all the time that we have on American Agenda. Cruising through this week already.
Quick.
It is, but there's a lot of news. And again, we're staying on top of it. But President Trump not slowing down at all.